we can drive the cost per dollar of donation down to a penny.
Yeah,
And
exactly.
so you need a fair amount of capital to start with when you drive the cost down as low as a penny. But everything except 1% comes back to you either in cash as the proceeds of sale from the flow through to a liquidity provider
Mhm.
or via the tax benefits. So I helped someone make a $100,000 donation, and at the end, it cost him $1,000 out of pocket.
It's
Very
fantastic.
powerful. Uh, it's the kind of leverage that you can use, and if you want to get your name on a building, this is one of the ways to do it.
It's fantastic, and I mean, we've talked about, I pound the table, Leviathan must be stopped. Doesn't mean you need to go to the barricades. The way that we curtail the avarice of government is to starve it, and if we can do it in such a fashion that we're unifying not just common sense tax planning, prudent tax planning, because these are long established strategies, but also to bring in that to do good, uh, and that's not to enrich the government. I can't tell folks enough this is something they need to be looking at. As I said, you don't have to be on a one-man crusade to, to storm the Bastille. Government needs to be curtailed. We need to return to an age of personal responsibility and individual freedom and celebration of profit and hard work and all those wonderful things. But this is a means by which everyone, or not everyone, but, people with some degree of affluence can step up, help themselves from a tax perspective, and at the same time, do the right thing by denying our friends in Ottawa, more of the king's shilling. So,
Yeah, but Trevor, I talk about large donations like that, but I have a little anecdote about a much smaller donation and how and why it works. So I have a client who was a client of mine when I was an investment advisor.
mhm,
And he runs a very small charity, and I was talking to him for quite some time about it, and he seemed interested. And I finally got him to sort of come on board. And I said, well, look, why don't you make a donation yourself? See how it works, understand the client experience, and maybe you'll be in a position to refer this to your donors. He said, well, I would do that, but I'm not planning on making much of a donation this year. He said, maybe a couple of $1,000s. I said, okay, how much is that $2,000 donation going to cost you? He said, $1,000. I said, what if I could make that $1,000 into a $10,000 donation? He said, I'm amazed. I'm in. And of course, he did that and he became a client. So I just want to make sure, it's clear that you don't have to be looking at donating $100,000,
no, no,
right?
agreed.
Uh,
Yeah,
and typically, I think a minimum investment or transaction might be a 25K,
yeah.
because I just don't think it's going to move the needle with less, right?
Yeah, exactly, yeah, exactly. And I think charities are now they're astute. They're getting this stuff. I know I've had conversations with a number of philanthropic organizations, and they're starting to really embrace the whole flow through strategy, because they know. And again, they go to their benefactors and say, "Listen, it's a choice. Do you want to do the right thing and help out with something you believe in, or do you want to give it to the government and see it squandered?" And I think it's an easy answer for most folks to come up with. The other thing we talked about in the past was, where we have an issue where, traditionally we've used life insurance, and the ability to create capital dividends to do postmortem planning, estate planning to get taxes down, and I can go on for hours about that. You in the past have told me that there is an application for flow through because let's face it, a lot of the time when you need to do the planning, you're older and your health wasn't what it was, and getting insurance isn't always the easiest thing to do.
Right. Well, there's a couple of points about that. The first is that, using life insurance to get money out of your corporation is fine, but you're dead. So
Yeah.
somebody else is going to get that money. We do a transaction that delivers a capital gain. I'll explain how that works in a moment, but that delivers that CDA credit when you're alive, right? So when you buy flow through share, let's call it, we'll use 100K only because it's round numbers, it's easy.
Sure.
You write off $100,000, and now you're going to sell the flow through shares to what we call a liquidity provider. They buy it from you the day you purchase it from the company. So it's a simultaneous buy and sell at prearranged pricing. So that makes this kind of foolproof. Uh, so then you're going to sell the shares, and let's say you're going to get about 35% haircut. And the reason you're going to sell for less is that the issuing company issues the shares at a premium because they know there's a tax benefit embedded. And the person or entity that's going to buy it from you needs an incentive because they can go and buy these shares on the open market. So you have to discount those shares. So let's call it 30 to 35% discount between what you've bought. Let's call it 100K. And the proceeds of sale which you receive will use $65,000. Now you've sold those shares, so effectively you own them for zero. Your adjusted cost base on those shares is zero. So when you sell to this liquidity provider, $65,000 cash that you receive, that's a capital gain. So 100% of the proceeds of sale are considered a capital gain. When that's done inside a corporation, half of that capital gain is credited to the capital dividend account, meaning the shareholder can withdraw those funds tax free. I had an instance where a business owner wanted to buy a boat and he said he needed $400,000. So we reverse engineered an $800,000 capital gain. He had to write obviously a fairly large check, about 1.2 million. But when all was said and done, he had a $400,000 CDA credit that was able to deliver that money so he could buy his boat from his company without paying tax on the funds that came out.
Huh, brilliant. Just as a ca just as a caveat, if you are a US taxpayer living in Canada, the American tax authorities don't recognize capital dividends, so we need to sit down with your cross-border expert and figure out.
Well, they don't. And yeah, they don't recognize the flow through deduction either.
Right. So,
Yeah. So I've kind of looked at this, and a good friend of ours, who's a cross border specialist, we said, "Nix,
yeah.
it's
So,
not gonna."
but it works for a good slice of the Canadian, entrepreneurial and professional population for sure. Um, it's midsummer. What are you seeing? What's bugging you? What's making you happy these days?
So I'm finding it very quiet. People are on vacation, not thinking much about tax, although this is a good time to be doing that. Um, so I spend my time, doing research, talking to clients. Um, it's an interesting time, but we are seeing a lot of activity. So we have product.
Yeah, exactly.
Interestingly, when we have product and we have more than we have in the way of demand, we still have to close the transaction. So we have to come up with the money that investors haven't come up to the table with. And so we own these shares with the embedded tax benefits and put them into our own limited partnership, which is just a single issue.
Right.
All the tax benefits are exactly the same. And the benefit of that is that you don't have to come up in the example we used before with the 100K. You only have to come up with the 35K, which is the net out of pocket.
Mhm.
So that's a pretty good deal. The other thing that has got me very, very intrigued is that uh, the present government has made some representations about extending the flow through regime to high tech startups. So, AI startups, other high tech industries, which would be really great for capital formation. If somebody owns the shares in a brand new tech company, they might not even want to sell them right away like they do with the flow through shares. They might
Exactly.
want to buy them and write them off. So you own these tech shares for zero, and who knows, you might hit a gusher with one.
And it and that's, that's heartwarming in the sense that, I mean, I've decried liberal tax policy for the last 10 years. It's the worst we've ever had. Perhaps with the new PM and elevation of certain folks to ministers' positions, and there's some new folks in there. There's a few that are competent. There are a whole bunch that aren't, and we can go on and on and on about it. But there is, I think, the understanding that the Income Tax Act and the enforcement of the tax regime has been absolutely a sort of Damocles hanging over entrepreneurialism, over aspiration. And if we have these measures that can come in, and I pound the table on a patent box and things like that, um, there are some signs of hope. Now that said, there's a report out last week that $93 billion has left the country since Mr. Carney's election. So the onus is still on him to show that he's not, uh, a mature version of Trudeau. He has the posture of Mr. Burns, as we joke. But so far, I think Canadians are prepared to give him the benefit of the doubt. But these types of measures, if these things can be encouraged, uh, I think that's beneficial. That said, I still want a wholesale rewrite of the Income Tax Act, and one day, whether it's forced or decided upon, it's going to have to happen.
Yeah, well, when you calculate the 53.5% and you add on top of that the HST and property tax and, municipal taxes and, all of the other things, the level of taxation in Canada is just beyond the pale.
And you're not
And
getting anything for it. Like, the civil service is an unemployment alternative. You look at Europe where they have a history, generational tradition of maybe delivering services. We're not getting anything close to that. We have a situation where, Leviathan has absolutely found a lovely nest here in Canada. Too many Canadians are sitting at home doing nothing. Government continues to grow and grow and grow. Now, again, Mr. Carney's made sort of noise about cutting the civil service, and let's so he takes out a great claymore and does it.
yeah, well, he makes a lot of representations, but, the proof, as they say, is in the pudding. So, look, like you said, we who oppose the liberal agenda are willing to give him some rope,
Yep,
and let's hope he doesn't hang himself and just pulls us all up from our bottom,
exactly.
right?
Well, with that, my friend, enjoy the rest of the summer. I understand you have a bottle of Maker's Mark with my name on it. Doug
Yes,
Ford,
sir.
be
Just
happy.
waiting for
So
you.
I will show up dressed like Foghorn Leghorn or Boss Hog or something like that, and I'll drink it with you. But once again, thank you so much for spending some time with us today.
My pleasure. Thanks for the opportunity, Trevor.
Thank you.